Market selling off right now. Let's get on over to Julie at the Interactive for some of the levels to watch today.
Yeah, so I'm looking at the two-day chart of the Dow Jones Industrial Average because we saw that huge climb in stocks yesterday after the Fed and Jay Powell took 75 basis points and an increase off the table. And now we're coming back down today. So over the past 2 days, we're actually up 0.2% if you want to look on the bright side. But of course, if you just switch it on over to today, you've got that 2.6% decline. And we're sort of going towards the lows of the session here. So it's not like we're bouncing off in this session. The S&P 500 is similar action. Here's the one-day chart, down 3.1%. Over the 2 days, it is down, not up. And I would imagine the NASDAQ is similar. Indeed, over the 2 days, it's down 1.1%. So it is erased yesterday's gains and then some. And you're hard-pressed to find green on the screen here. The Russell 2000 of small caps is also down by about the same amount. You've got Dow Jones Transportation Average, which tends to be a proxy for the broader economy. It is down sharply today as well by some 2.3%. Semiconductors are down by more than 4% here. We have seen, obviously, a lot of the binding up of technology and higher rates going together. And speaking of higher rates, where's the green on the screen here? Well, there's volatility, first of all, as we see the VIX climb towards 30 once again. But then, of course, we've got rates that are heading higher. Up, there it is again, 3%, above 3% on the 10-year yield. We just crossed above that threshold earlier in the week for the first time since 2018, and we are back above that level now at 3.04%. So that's the highest that we've seen. Let's have a little fun here. Let's go back a few years and see when is the high up. It looks like this is the highest again since 2018 that we have seen that 10-year note. So that's what we're seeing in assets. I want to look at some of the havens as well to see what we're seeing in terms of, well, Bitcoin is going down. That's a haven for some, I suppose, but it's not seeing any bids today.
Haven for Elon Musk, Julie.
And gold. Gold is trading higher today here, too. Let's look at that shorter-term chart. So we've got gold prices trending higher by 0.9%. So some people are looking for what they perceive as safer areas in this market.
I think we broke it down great at the top of the show, 9 o'clock hour. The bulls likely got their response yesterday completely wrong. And I think you have a lot of investors coming back here today, just reassessing how they reacted yesterday and realizing Jerome Powell didn't pull off any more rate hikes coming. He just ruled out a 75 basis point hike. This Fed is still hawkish and is still moving higher on rates. And perhaps they got too aggressive yesterday, investors bidding up those tech stocks.
Well, and then you have to look at the other part of the backdrop, too. We got an ISM services report and a manufacturing report this week that were both below what economists had estimated. You have today a bunch of e-commerce stocks that are coming out and missing estimates, right? So that implies a slowdown in demand versus what we had been seeing. Shopify down 17%, Etsy down 14%, eBay down 9%. So just a few examples. Wayfair down here, down almost 18%. And so these companies may be showing that the backdrop, as those rates are going higher, maybe it's not as fantastic as some people were estimating, you guys.
Keeping an eye on some of the sectors here, too. I mean, consumer discretionary was getting cooked. I mean, you can't really find a bright spot right now, quite frankly. But consumer discretionary leading the brunt of the declines right now, down by about 4.8% here on the day. And then additionally, looking across some of the others, technology, of course, in this rising rate environment, that's continued to move lower as well as we're taking a look at some of these declines.
I see no green on the screen of the 11 sectors within the S&P 500. No green whatsoever and a lot of dark red. Consumer discretionary. We got some blinks going on there. It's down so much that it's freaking out. Consumer discretionary, tech, communication services, financials. Financials down even though rates are up because people are worried about that underlying economic backdrop. You've got materials, you've got real estate, you've got industrials. I mean, everything is down here today. Let's whip on back over to the NASDAQ 100 for just a minute here because, oh, look, there's one little lone green square in the middle, and that is Charter Communications.
I knew you would find it.
A cable company, a nice, boring cable company. Maybe that's what people want right now. Elsewhere.
Booking.
Okay.
Well deserved.
There's one other little green screen, travel. Okay, based on the company's earnings, but I think that's it. Do you guys see any other green on that screen?
Nor the green. Even Crocs.
I don't see any.
I'm reading Crocs' earnings right now. No green on the screen for Crocs here. And here's another consumer products company that has been out there raising prices. And despite them out there raising prices, their gross margins down almost 600 basis points year over year. I would say their outlook is on the weakish side, but all in all, maybe it's a win today that their stock is only down 4%.
I think it is. It started off positive earlier in the day session, but of course, going the way of the broader markets here. A few of the other call-outs from the report: digital sales for Crocs brand that actually grew 20.3%, represents about 32.8% of their total Crocs brand revenues. And I'm sounding like a Crocs stan here, but honestly, I don't even own a pair of Crocs. I'm just a fan of the fandom around
Crocs.
Yes?
Don't your kids wear Crocs?
My kids do wear Crocs.
They got the gibbets?
They have the gibbets.
now
Although the
$60 a
gibbets do
pop.
not, the way my son plays, the gibbets do not stay.
Well, that's good for the business of Crocs.
I guess so. He's lost a lot of Crocs.
$60 for a pair of Crocs clogs right now.
Tough to play kickball on some Crocs and lose some gibbets along the way.
Yeah, that's true. Let's talk about Nikola for a minute, too. This company has been so interesting to watch, right? And if you look at it today, adjusted EBITDA loss of about $79 million, although that is a smaller loss than estimated. So we're seeing the shares actually trade higher here today by about 5.5%. Who would have thought on a day when you see the NASDAQ down by 4%, the Nikola of all companies would be up 5.5%?
I have very simple analysis. One, I'm going to keep it brief. Not really a real company in my view, so I don't have much to say on it. Number two, only $360 million in cash. If they're going to want to make these hulking giant semi-trucks made with electric batteries, they're going to have to raise more cash. I wish them well.
I still don't think that Nikola is a serious contender in this space. I mean, as of right now, it's been pure videos and announcements.
They look good, though.
But
Well, I mean, the stock is up today 5.5%, but it's also down 20. It's only down 20% over the past year. Is that right? You would think it would be a lot more than that.
23 year to date.
23% year to date. I would have expected it to be down more.